Assalamu alaikum wa rahmatullahi wa barakatuh. Good afternoon, everyone. And thank you very much for the opportunity with the illustrious panel and some very interesting perspectives from Tansri as well on what we can expect going forward when it is Islamic finance that is expected to provide some serious social impact. So I'm going to keep it brief on my side and then quickly go on to the panel questions. And hopefully, if we have some time, please do send through your questions. We can read it up on the pad and then pose that to the panel as we go along. So the topic is rather, trendy, digital, fintech, innovation, and certainly the manner in which we address it is going to be something unique from an Islamic finance perspective. So we're going to learn a little bit more about that. But I want to take a step back just to set the scene. If we look at MSMEs, micro, small, medium enterprises, even social enterprises, then we see that they are a critical driving force in Southeast Asia. They account for almost 70% of the national labor force from 2010 to 2020. In 2021, a study by the Tech for Good Institute found that over 60% of MSMEs were unable to access financing. 60%. Besides MSMEs, you have different sectors. The informal working sector, estimated to account for over 70% of the Southeast Asian workforce. They remain financially underserved. Many don't have bank accounts, they are in debt, they transact predominantly in cash, and they make it difficult to build a credit history that would give them access to formal financial tools. Even for retail banking customers, services are limited. They're limited to first-level services, such as savings accounts. And for some, there's a lack of awareness. There's also a fear of hidden fees, high prices. There's also deterrence against buying insurance and investment because they don't understand exactly what they're getting into and they don't want to lose their hard-earned wealth. Others require more affordable solutions. They require bite-sized plans, not plans that are going to talk about future generations. They can't think about all of that. They need to think about bread on the table today. Mobile phone penetration is another issue. So in most Southeast Asian countries, this has significantly outpaced credit card or bank account penetration. And that's a positive. In Indonesia, for instance, around 75% of the population owns a mobile phone, while credit card ownership is negligible. And only half the population actually has a bank account. Half of Southeast Asia's population is under the age of 30, and they're tech savvy. So they're quite ready to adopt an online payment system, an online approach to financial services, faster than their counterparts in the West. In fact, cashless banking itself has been given several boosters, except the boosters we've been taking over the last 2 years. Cashless banking has been taking some boosters as well, and they've jumped from 18% to 58% in just 2 years for Malaysia. That's for Indonesia. For Malaysia, 18% to 45% from 2018 to 2021. Singapore is almost 90% cashless according to these stats. But when it comes to digital banking specifically, you're talking about cashless banking, but a more institutionalized approach to cashless banking, then you've got to ask yourself, does digital banking really solve the problems? And if they don't, then we've got to question whether this is the right way to go. And that's what we're going to ask the panel. So I'm just going to highlight some key aspects, ask the question for us to think about, and then pose it to our panel. So firstly, as Tansri has mentioned, and even Mustafa had mentioned earlier, Islamic banking assets are growing, but they are still minuscule. They are very small compared to conventional banking assets, almost 2%. okay? The premise is that Islamic banking assets can increase substantially if digital banking is now introduced and they utilize fintech, they reach rural areas, people without access to financing, and that's all great, but it's not in a vacuum, because if Islamic banking goes digital, conventional banking also goes digital. So that's another question, okay? Does Islamic digital banking really meet that market share objective? Then there's the argument of high institutional costs. Traditional banking is supposedly expensive, and IDBs, meaning Islamic digital banks, are expected to lower that cost for customers. But then the targeted economy, the targeted segment, they only use first-level banking services, which are relatively cheap anyway. So how does that solve the problem? Next, digitizing the credit risk process. We've heard about artificial intelligence, machine learning, and really tackling all that data, bringing it together and trying to now design a credit history, a credit risk profile for a customer who has no credit history. But there are other issues like data biases, data privacy issues, or even the Orwellian threat of manipulation by the thought police now that they know exactly what our behavior is. So this is a question. So how safe is it? Then S&P's financial literacy survey ranks Indonesia, Thailand, Philippines, and Vietnam in the bottom half of 144 countries. When it comes to financial literacy, they are in the bottom half. So if literacy levels are particularly low among the underserved community, then how does Islamic digital banking expect to solve that unbanked and underserved problem? Finally, Islamic digital banks and digital banks in general tend to connect the technology ecosystem. I mean, they bring together the gig economy, online platforms, digital services, etc. They boost online efficiency, and they have spillover effects on infrastructure, because you've got to have infrastructure developing at the pace of digital banking services, or else you can't deliver services. So is Islamic digital banking expected to boost that gig economy more than conventional, or in a different way than conventional? So I'm going to leave it there. These are, thoughts, initial thoughts, just to set the scene. And I know that the panel has exciting experiences that they've had. So I'm going to begin with perhaps our dear brother Usman from CIMB. We go back a long way from HSBC days as well. So my question to you now, in a traditional bank. Now, we already have traditional banks offering more and more digital financial services. Okay, you part of a traditional bank, you offer digital services, and we'll be hearing from Sister Rafiza from the digital bank perspective, specifically your experiences. But how should we view digital banking, digitization of processes? Is it a new solution altogether? Is it just par for the course? How do you see it from a traditional banking perspective?
Assalamu alaikum. And again, thank you very much for having me here. A great question. From a traditional bank point of view, digitization doesn't mean a digital bank. It just means a digital channel. How we go back to our customers, how do we market to our customers, and how do we get the customers' touch points sorted out in a digitized manner. Whilst having that, it's extremely important, but we often forget traditional banks are driven predominantly by brick and mortar processes. The problem lies there, resilience. How do we create tech resilience in the way we do things? How do we ensure that our processes are streamlined? Because once you go digital, you're literally going to be opening the floodgates for a lot of volume that's going to come in. And how do you ensure that, well, banking is a service industry, and how do I ensure that my clients are being served appropriately, diligently, and being served the right thing? And that's where a lot of work, industry actually is doing a lot of work within the traditional banks, is to create that resilience. You can start with transforming your internal processes, looking at how we market our products to customers, and getting that tech dependency right within our internal framework of the bank. And that's a starting point for us. It's been a very tough journey, I must be very honest with you. For a bank in which I work with, it's a bank that's been merged many times. Getting that space right has been one of a key challenge, but slowly and steadily we're coming there. But we make no mistake in saying digitization is only a front-end proposition. Yes, it's a channel, but with that channel comes a lot of onus and ownership from the traditional banks to ensure that we get it right, because the reputational risk and the economic impact of that could be far worse if we don't get it right. That's at least our view at this point in time. Yeah.
So, from the perspective of traditional banks, just a quick counter on that. Do you see digital banks as a threat?
Certainly not, actually. In fact, I think it's a coexisting relationship between the traditional banks. See, if you look at the infrastructure of banking, whether it's Malaysia or any other ASEAN country for that matter, you still need deposits to fund those, financing. And the biggest question is, digital banks, yes, they have, they have better data touch points, they know better products, better services, quicker, faster, we can go on. But bottom line is cost of funds. And traditional banks have that advantage given the current capital infrastructure that we have today. So how we look at it is that how do we plug and play, or in some in certain cases SaaS with traditional banks like CIMBs, how do we go to our customers through digital channels, leveraging on our infrastructure? Because we speak about the point of micro financing is a good example. We charge our customers 20%, right? And yeah, financial inclusion at what cost, right? So how do we bring that cost of funds down? How do we look at the credit appetite? How do we look at alternative scoring to serve those customers? Are key, and that's where traditional banks play a big role in. And therefore, we believe that it is a coexisting relationship opposed to a threat. It's a trade-off, really, if you look at it, like leveraging off each other.
Sister Rafiza, thank you very much for joining us on this panel. And you have first-hand experience on the digital banking side. So do you accept that? You believe it's an issue of coexistence? Do you see them as competition?
Well, first of all, I'm not so sure whether we've experienced things, because it's been only since April since we were given the license.
Yes, sure.
Yeah. So back to your question, yes. We don't see I would prefer to call it incumbent banks rather than traditional banks. I don't see the incumbent banks. In fact, even with the other four, that won the license, I don't believe definitely at the beginning that we are in competition, because the whole purpose of the digital banking license under the Bank Negara framework that's in Malaysia is for us to meet the underserved and the underbanked, and these are the people who are currently, for reasons or another, not able to get financing services of the existing banks. So we're not going after the corporates or the commercial, the big people, the rich. Those are the sort of clients that we're going to touch. We're going to touch with the ones who are currently not able to be met by the incumbent banks. So I don't see no threat. Definitely, because not everyone prefers to go digital. There are still a lot of people out there who wants the basic human interactions and who needs to go to the to the branches to do their bankings. So we are only targeting people who demands digital, online, mobile way of banking services, and those who may not have the ability due to certain reasons, like for example, they don't have regular income, they don't have the documentation, as you rightly pointed out, they don't have a credit history. So these are the sort of the target market segment that we are going after. Yeah.
That's excellent, and it sounds very exciting. But just a very quick follow-up on that. Can we expect a different Malaysian banking landscape within the next 3 to 5 years?
Well, that's our hope. That's definitely our hope, because as Bank Negara in their digital banking framework, and when they make the assessment of who to award the banking license, that they expect, and for those who won, provide a very strong value proposition on how they're going to meet these underserved and underbanked. You mentioned some statistics. When we did a study, prior to us submitting the application form, we saw 22 million of adult population. Through a research, 55% of them are underserved and underbanked. And as you rightly pointed out, the Malaysian populations are young. They are transitioning from the education sector to earning income. They don't have the credit history. So these are the gig workers, the freelancers, as you can see after the MCO, a lot of people who prefer not to go and get a permanent job and rather do freelancing. They don't have salary slips. So these are the sort of people that we are looking for, and we really hope, and we see some other countries who are slightly more advanced in their digital banking space, that there has been validation that it provides better market access, financial inclusion, and also provide a better efficiency and a better cost of financing to those underserved and underbanked. Yeah.
Excellent. Thank you very much, Sister Rafiza. Bringing it back to not just digital banking per se, but Islamic digital banking. There's supposed to be a uniqueness, a difference between digital banking, conventional digital at least, and Islamic. So my question to Dr. Aznan is, there's a prevailing concern that Islamic banks are not achieving the social impact that they are supposed to achieve. So the first question is, do Islamic banks need Islamic digital banks to achieve this social impact?
Thank you very much. Assalamu alaikum warahmatullahi wabarakatuh. And good afternoon. It's good to be back to Bursa again after how many years. I used to be advisor for Bursa when we developed the BISAS framework and ISBNT as equivalent to SBL. See the same place again with the same people, alhamdulillah. Thank you also for organizer for allowing me to give my thought about that. Giving some background on that. In one of the regulators in other part of the world in GCC, when I sit as the advisor, we spar on whether Islamic digital bank is needed or not. Sorry, whether digital bank is needed or not. Before we talk about Islamic digital bank, we talk about whether we need digital bank or not. Digital banking is needed. Whether you are operating as a separate individual digital bank, or are you still, whether you call it traditional, whether you call it incumbent bank, but digital banking is needed, like it or not. The young generation, they like to see their tech rather than people. In UAE, Tan Sri, for that matter, people are willing to take a bank facility with a higher rate if they can get a better digital experience. So they don't like to go and meet people, let alone to see the bankers. Sorry for that, bankers. They don't like to see the bankers anymore, yet they want the banking facilities. That's why what has been said that banking is needed, but banks may not be needed. So we spark an idea whether we really need a digital bank or not within that particular jurisdictional framework. So I give an example in that particular debate. I coming from the Shariah fraternity, the representation from the Shariah advisory board of that particular central bank. So I give my point of view. I said, whether you need or not digital bank, it depending. You put an example of a big ship. You are a big ship. Sometimes when you are a big ship, when you want to move, it takes a long time for you to move. And when you want to have something fast and speed, you need a smaller ship for you to be able to carry what you want to achieve at. So whether you need that particular small ship or not, depending whether you are a big ship then can move fast or not. When we talk about digital, there are three main important things that we have to understand. The first one is digital. What do you mean by digital? Everything comes in digital. With all, you digitalize everything, you have all the blockchain, you have all the AI, you have all the smart contract, you have all those sometimes digital asset and digital token and all those things, that is digital. The second, what you need is agility and nimbleness. This is very important. If you're talking about digital, if you don't have nimbleness, you are nothing. Because the purpose of having digital for you to be nimble and to have the agility. The third one, which is very important and challenging, is securities. Sometimes you have a good digital facility, you have a lot of agility, you move very fast, but at the end of the day, you fail in terms of security. In 2017 alone, the studies by cybersecurity shown Malaysian lost 2.23 billion because of cybercrime. So when we talk about Islamic, when we talk about digital banking, for example, it is very prone to the banking sectors for that matter. So whether you need or not digital banking, depending on a lot of variables. Okay, coming to Islamic bank, I believe Islamic bank having the same situation. Whether you are conventional, whether you are Islamic, whether you need a digital banking or not, it's the same about Islamic and conventional. And I believe that if we say that Islamic bank is unable to fulfill the philosophy of Islamic bank, I think we have to look back whether that is true or not. I mean, we have in that Tansri mentioned about the progression that we have in Islamic banking. We talk about wakaf, we talk about zakat, we talk about social finance, which I believe that Islamic bank is doing quite well for that matter. Whether we are able to reach certain particular segment, that is the question that we need to do. We need to understand. And whether digital can help us or not, that is another question. Right. Bank Negara, when they come with their policy document, they mention about two segments that they feel that digital bank will help to spur further. The first one is underserved, the other one is unserved. Okay. The unserved and underserved is not only about Islamic, it's for all the segments of the society. Of course, Islamic is one of the things. So Islamic bank, one of the purpose is to serve the people. Perhaps that can be done better by having Islamic digital banking. Whether we need or not, it depending on your capabilities. One Islamic bank, for example, they may not need digital bank for them to do digital banking. All their segment that they have can do that. Open many of our big Islamic bank in Malaysia. I don't want to mention. I mean, take example CIMB, Maybank, for example. Even though they don't have even though they don't have a digital bank, but they have practicing digital banking on their practices. To this particular bank, perhaps to them, not having digital bank is better than having digital bank. Because even though they are a big ship for that matter, they will be able to move fast when they need to move for that matter. So in my opinion, whether Islamic bank need Islamic digital bank to be able to serve the underserved and unserved society, it depending on what capabilities that the bank have. For some banks, for example, I sit on the board of directors of Maybank Islamic, for example. We believe that without having the digital bank license, we still can serve the unserved and unserved society, segment of the society. So we debate and we come to the conclusion, we don't want Islamic digital bank license, yet we want to do Islamic digital banking within our incumbent and traditional bank framework, serving the underserved and unserved society. That is what we need to do for the time being, what we call as humanizing finance for that matter. Tan Sri put on that particular thing. So that is the purpose that we have. Need or not, depending on what is your capabilities and the segment that you want to serve within that particular underserved and unserved society. It's my opinion.
So just leading on from that, from the Shariah perspective, are there unique skills that will be required by an Islamic digital bank? Unique products and services. I mean, you can talk about that uniqueness of that Islamic digital bank. Why is it that it has to go through a detailed licensing process, etc.? What's unique about it?
Interesting. I mean, the same question and the same answer. We don't know how it's going to work later on because we don't have any example of Islamic digital bank as yet. But what I can answer you is that in the policy document 2020, when Bank Negara issued the letter, okay, they put a very specific regulatory requirement when it comes to Sharia. Very interesting one. What they said, all the digital bank is responsible to ensure all relevant Sharia governance, except in two things. The first one, the normal Islamic bank need to have 5 members. They only require to have 3. Am I right? The second one is that we need to have a more meeting numbers. They are only required to have 2.
at least. Means that they go more, that's their problem. But at least they have to have 2 per year. So what that mean bank negara, when they put this particular policy document, any bank negara, I'm sorry, try to interpret your policy document. My understanding is that there will not be any different in terms of Shariah regulation between Islamic digital bank and the normal Islamic incumbent bank. But again, the main problem that you may face here is that you have a problem to get a good scholar for your traditional bank. Okay? I mean, to get 4, 5, very qualified, very elegant, very good in terms of discussion and everything on the board is very difficult. For you to have 3 good people on Islamic digital bank is another challenge. Why? For them to advise on digital bank, they have to understand the normal traditional bank first. Then only on top of that, they need another skill set, which is the digital and also the fintech understanding on the Sharia. There are a lot of other things, brothers and sisters, which has not been tested from the Sharia point of view until now. Not to scare you out. You're talking about AI, you are talking about smart contract, you are talking about cryptos, you are talking about digital token, NFT and all those matters. There are no clear-cut Sharia ruling on permissibility or not as yet. The nearest that you find is what we have decided on the SC website, where we allow and we consider the digital asset to be Sharia compliant. Of course, provided that you meet certain criteria and everything. That is the nearest so far. You go overseas, the debate continues till tomorrow, perhaps. You never know. Okay, so that is the challenge that I believe digital banking, Islamic digital bank need. How for you to ensure your scholars is able to understand the working material of Islamic digital bank for them to be able to give you good advice that can sustain and allow you to do business. Smart contract, for example, a lot of discussion that I wrote a paper on smart contract, whether that can be accepted for Sharia. What is the guideline for allowing smart contract? There is no ijab and qabul. There is no people to sign here and there. All are digitalized. How we perceive on straight-through process, for example, now Bursa coming with straight-through process, where everything is digitalized. I remember in one of discussion, if I may close, in Qatar, in one of the Islamic bank that we were there, I mean, we want to do community murabaha where the machine will do the offer and acceptance. Because when you do straight-through process, there is no human involved at all. All are machine. The machine will do from the banking side, they will do all those digital thing in terms of offer. Bursa side, if you do Bursa, that will do come under offer and acceptance. So one scholar asked, so where is human? I said, Sheikh, there is no human involved here. La hawla wa la quwwata illa billah. So that's to see, I mean, you need one of big challenge that you have, how to make your scholars understand that this particular game is going to make the Sharia decision also need to evolve with the evolution of time, place, and also digital practices that we are going to have in your Islamic, if I may say so.
Thank you very much, Shukran. I mean, that provides good insight and a good overview of some of the Sharia considerations in Islamic digital banking. And it's untested, as you've said, and it's something new, even for scholars, to identify and analyze exactly how they will be approaching and providing verdicts on the various products and services. I'm going to switch gear a little bit and move into the lifeblood, arguably, of digital banking, and that's data. So data is becoming the most valuable commodity. So as digital finance service providers use big data for transactional behavior, measuring purchase history, they now create credit risk profiles utilizing all of these data points. Now, unfortunately, you know that artificial intelligence is currently being used for credit scoring. It's becoming more established, but it doesn't have, it's not without challenges, unfortunately. Studies from the US find that predictive algorithms can be notoriously noisy. They result in data bias predictions because they're based on their human coders. The result is not just an unhappy customer who doesn't get financing, but it also contributes to inequality based on minorities, race groups, income levels, and geographical locations, amongst others. So my first question would be to Brother Usman. Do you see machine learning, artificial intelligence driven credit scoring as a game changer, first of all, for Southeast Asian customers in general? CIMB has a broad reach. And what then can the regulators do? So, first thing, I think it's about AI and using AI for credit scoring. How do you see that pan out through data points and big data?
Yeah, I think the first point is algorithm bias. It's not a paranoia, it actually exists. It's a fact. And there is no solution to that problem. Algorithm bias is something that we can really try and bring down the biasness by multiple data sources, transparency of data, regulators playing a role in how data is being gathered, and then really looking at how you segmentize those data accordingly. And to answer that question in terms of the biasness is something that we're always going to see. And in time, we would see that change, provided we get a lot of data in the play. However, when it comes to alternative scoring, it is something I'm very passionate about because it resonates very well with whole Islamic finance and really looking at financial inclusion. That is something that it's an ever-going trend, and I do believe personally that it is a game changer. Why? If you look at the brick and mortar of any individual financing application, what goes to is two things: application score and something called a behavior score. These are all based on existing banking relationship that particular customer has. You don't look at certain demographies of where the person stays, age group, family composition. You don't look at purchasing trend, whether it's through a digital medium or not, which, by the way, a lot of fintechs are starting to evolve in South Asia, where they're looking at data in and data out within multiple industries. So these are something that we can look at, and I think it's a very important role the regulator needs to play here. Of course, banks need to manage ROE, so we can't sandbox everything. So I think that's important that the regulatory landscapes provide that opportunity to kind of sandbox alternative scoring mechanisms. Even psychometric scoring was big at one point, and then it's dwindled down now. Now looking at certain data points. I mean, look at Tesla, for example. It's not an electric car company. It is literally a data center, right? How do we look at banks looking at alternative scoring just through pure data based on demography of data? And if I can end, Dr. Ziad, I think it's important to understand the data source for this. We typically look at Google, Facebook, Instagram, or whatever the social media output for primary data sourcing. In fact, that is what causes algo bias. We need to start looking at data sources outside of the mainstream data sources. You're talking about data sources from third-party sources. Government agencies is actually very instrumental for this. This is where I think the regulator need to play a big role in terms of helping us gather and then sandboxing these initiatives. And that is a first step to get that journey going. It's not perfect, but we could perfect it as we go through that journey.
Well, thank you very much. Sister Rafiza, it's a follow-up from data and how you
Yeah.
intend to deal with that, and the regulatory perspective as well. How do you see that?
Yeah, if I can add
Please.
to brother's point, I completely agree with him. And the robustness of what we call it, the alternative credit scoring, very much premise on the source of data. At the moment, a lot of our data are not shared. They are within their own system. I think the regulators are in the right in the right direction, because I think they're, in fact, they've recently asked a survey with all of us how we want open data or open banking landscape to be like. So I think they've opened their mind with that. But unfortunately, like, I completely agree. We are having difficulty with the data that resides in other organizations. Like, for example, NRD, SSM. If only we can have access to this data, then perhaps we can better assess and improve on our credit scoring methodology, so that it does not just rely on past credit bureau assessments on how often you've not missed your banking payment or your banking loans, and whether or not they pay their bills on time, they pay their rent on time. So I think these are some of the things that we see other countries that they're moving towards too. Yeah. So, now, with respect to regulators, again, it's the same wish that, hopefully we can coordinate better among the other agencies that especially have this data that we can better utilize and use it in a responsible manner. Yeah.
Yeah, you mentioned other countries and how they're managing data, etc. It just reminds me of an example that's available in the market today, and that's matchmaking based on transactional behavior. So it's basically how quick I pay my electricity bill and my rental, and if there's someone else who has the same tendency and the measurement of how soon I pay, do I pay it 3 days before the bill? Do I pay it 1 day after the bill? And they do matchmaking that like that. So from an AI perspective, data perspective, it seems that, well, our entire lives just out there. This morning, I received a message from Google asking me, these are 3 pictures. Which one of them is you? I found that very, very invasive. I mean, it's asking me, who are you? So I can actually put a face to all of that behavior that you've been, conducting over online. And it's quite jarring. And the Asimov's approach to, that minority report of predictive capability of an AI to determine how you will conduct yourself in future, without realizing human nature may change and is quite disruptive in itself. That's why we have fintech. But yeah, I digress slightly. Dr. Aznan.
I think the AI and the bias of the report, it happen everywhere. Whether you use the big data or you use a limited data, the scholars do that sometimes. You can manipulate the data to get some result. I mean, depending on how honest you are. So it's either deliberate or it's undeliberate. That is the question that you have. I mean, it depending on the quality of the data. In one country, in Europe, they talk about the open source. But I find it quite contradictory. Why? They say that it's an open source. At the same time, they say the data privacy control. So what you want to do actually, are you really want to open the data for people to use, or you want to limit? They say there must be a balance to strike between the two. Fine. But what is the balance? That is the question that we have. If you are talking about an honest data, and the open source data will be the one that's very important. That's why when we study, I'm advised one data company in Middle East. I can see how, what I can see is that I can pin up one person. If we can collaborate the data from every angle, I can predict what this person is going to be based on what they have shown to us in the next 5 or 10 years. We call future studies, using the AI for future studies. So you can expect something based on 3 things: based on your previous, based on your current, based on your thinking methodology. Then they can predict what kind of person that it can be. If we can collaborate all the data, it's very dangerous and very crazy thing in my opinion, because at the end of the day, you are like naked to the whole world. Actually, they can see you from every angle, which is very dangerous for that matter. But data manipulation happen, and that will result in bias result in terms of assessment, in terms of everything that can happen. But at the end of the day, I believe in one thing. While we want to have an open source data, but at the end of the day, data privacy is very important. And the bank must be able, while they try to source the data, try to get the right one in their assessment, they have to ensure that data privacy is protected in that sense. So that is the main, in my opinion, I give you an example. One of the things that this company is doing is that they call financial algorithm to some of the investors. Okay, so they do the testing. They have the system will what we call investment algo. At the same time, they have the normal you can call traditional or incumbent financial advisors. Okay, financial advisors. Okay? So they put 100 people as their subject of the study. To that company. what happened in that particular result that they shown us for that matter, is that it's almost 95% the same with what the system has generated and what the traditional advisor give advice to their client. So that will be the moving forward. They have now put what they call legal advisor, internet legal advisor, where you want to do contract, you don't need lawyer anymore. I put a question to them, perhaps one day you don't need me anymore. Digital Mufti. They call Digital Mufti, Digital Channel Advisor, so perhaps I become something irrelevant to you already after how many years to come. They said, perhaps, doctor. So that is the situation that we are. But again, in my opinion, when you talk about data, how you mine the data and how you source out the data, that will be the source of the quality of your assessment. I believe in that manner. So it can be very distorted situation if your data mining is not on open source and big data. It can be very good one if you can manage to get. Of course, when we talk about open source information provided by relevant authorities, that is a good one, because their data will be more authentic compared to the data provider, because they will say what you want actually when you give the data. But if it is regulation, if it's regulatory, it is government based, for example, the data is quite what I call stable and true to the perspective. So the quality of data will determine what will be the result of your assessment later on in banking, even in my opinion.
Thank you very much, Dr. Aznan. We have a question from the audience, and just bear with me here. I'm trying to summarize the question. And this is open to anyone on the panel. The question is, to develop AI and fintech requires infrastructure and regulatory development that is not currently available in Malaysia. So the question is, will Malaysia have to extend its time horizon on developing both fintech and AI when Malaysia is adapting the neoliberal fiscal consolidation approach on navigating the current economic condition? Shall I repeat that question? Okay. So in summary, the development of AI and fintech in Malaysia still has a way to go, infrastructure and regulation. So the question is, will Malaysia have to extend its expectations, its time horizon on developing both fintech and AI when, and I'm quoting, when Malaysia is adapting the neoliberal fiscal consolidation approach on navigating the current economic condition?
To start with, do we have any timeline in it even? I don't think we have any timeline for that matter, am I right? So it's still to me an open exploration, I believe. Because I don't think, as far as my reading is concerned, when it comes to this fintech, not only fintech, all the AI, big data, and now we're talking about quantum, for example, for that matter, I don't think anyone in the regulatory, whether it is government or Bank Negara or whatever, have any time frame for that to start with, for us to extend. But I, in my opinion, it's still an open exploration. In my opinion, it's still open exploration in the way that people are trying as much as possible to do what they think best to suit their own sectors. We financial, we look at the fintech, we look at the AI for the purpose of financial, for that matter. Agricultural, we have their own way, and everything we have their own way. But I don't think we have any time frame given anyway for us to say that after this we need to extend, for that matter. I'm sure that is my initial thought about that. So it is an open exploration, in my opinion, when it comes. I think not only Malaysia, everywhere in the world is still on the open exploration basis, in my opinion. Wallahu alam.
Okay.
Sorry, if I could just add a quick point, I completely agree with what you just said, because there's a reason why there's no timeline, because we are keeping a breast market. Well, Malaysia has taken a very interesting approach on this. I mean, yeah, by the time we got our digital license, banking license out, it took a bit of time. And that's because of the infrastructural rigidity that the governance was looking at. And that starts with a consumer protection data governance, which needs to be robust and to ensure that, well, you're serving an end goal that is beneficial to society. I think that's why it's taken some time. But I don't think Malaysia is falling back. In fact, within its own respective segments, there are a lot of incubation projects that's going on. In the industry which I work on, which is transaction banking, it is core to the fintech space. Whether it's cash management, trade financing, you mentioned about matching. Malaysia has already got solutions. In fact, if you look at the Malaysia during the pandemic, a national initiative of funding trade financing solutions, the Chakna initiative by Bank Negara Malaysia, were all part of really bringing the digital pace together where banks could fund. Now, these are customers we don't onboard. We're using existing data between government versus suppliers suppliers for government entities to fund them, give them working capital for SMEs. These are all started 2 years ago. Of course, we are perfecting as we go along, and that's the journey of digital. There is no end game. It's literally about perfecting it throughout this journey, and that is what Malaysia is going at. However, it's playing a balanced game with it, not going all out. Let's be a bit, restrictive and cautious, and we are seeing some light at the end of the tunnel there.
Of the policy document 2020, it mentioned about the foundation stage, where they from 3 to 5 years, then that digital banks shall achieve to 300 million unimpaired asset, for example, and they cannot go beyond 3 billion of their asset. I think if, say, for example, the bank is able to achieve that target before 5 years, then they can apply for them to pass the foundation stage. If that they mean by that is only on the financial sectors, I believe. But on other sectors, I mean, AI is bigger than just financial. It's not just about financial. Financial is part of that big AI world in that manner.
No, I would think it's very specific to that timeline. Yeah. Okay. Sister Rafiza, anything? Okay. There's another question from the audience, and that is, it's about Islamic digital banking. And I think it's something we touched on earlier. The question is, as an Islamic digital bank, will both products and back-end processes be Sharia compliant? How do you make your clients feel comfortable that the Islamic digital bank provides full end-to-end Sharia compliance?
I mean, it has to be end-to-end Sharia compliant. But the word Sharia compliant sometimes misunderstood by many. When sometimes people understand Sharia compliant, it has to have all the Arabic term everywhere. That is the main problem. So as if without the Arabic term, you are not Sharia compliant. Tan Sri, sorry, so that's the facts. I mean, when we talk about the system, I myself, as one of the working with regulator, one time they did audit. Okay, and what happened is that particular auditor come back to us, they have nothing mentioned about Islam at all. I said, so what? What's their problem? What is your problem actually? So you want to them every time they start with the word Bismillah, Bismillah, they only become Islamic or what? I said, system is system, right? System is system. It's nothing un-Islamic about the system. How you use the system, that different issue. A good system, if you use for non-good purpose, it becomes non-Islamic anyway. But of course, a good system must be used for good purposes for that matter. So it has to be end-to-end Sharia compliant. But definition of Sharia compliance must be understood within the Sharia philosophy and framework, not be because of our taste and preference. Sometimes people put their Sharia compliance based on their preference. I give you an example. Deposit can become in so many Sharia contract use. No, I don't like tawarruk, so it's not Sharia compliant. That's your preference, brother, no problem. But don't say it is not Sharia compliant, because Sharia compliant is bigger than you and me. It is about the philosophy, the values that we want to impart on people. So if you ask me whether Islamic digital bank has to be Sharia compliant, it has to be Sharia compliant A to Z. But definition of Sharia compliant is not by my definition or your definition. It is about real Sharia definition of compliant.
Okay, Sister Rafiza.
Completely
From the
agree.
practical perspective.
From the practical. Well, when you see, the good thing about the digital is the Islamic digital bank is that we can start from scratch, right? And the last couple of weeks, what we've done is to really drill down. Okay, what are our target segment, right? and what are the pain points, what are the problem that we're solving. So we're looking at what is the immediate needs of the underserved and the unserved community. So we look at that. Okay, what are the products can that address the problem statement, and the products that that we are going to offer to them must be Sharia compliant. So that's from from the product point of view. Now with the system, how can we say that the system is not Islamic? As long as it's not haram. There's no there's no speculative involved in it. So from our point of view, definitely it has to be um, Sharia compliant or Islamic, from end to end. And definitely most of it is a product, because at the end of the day, it's our customer who will be, who will be utilizing these products. And for them, they need to be comfortable that, it meets with, the principles of Sharia. Yes.
Osman, any comments on that one?
A quick one. When it comes to Sharia compliant end to end, and speaking from a traditional banking hat, it comes down to the contract, how transparent and how articulate that is. That's one. But from a process angle, end to end also means the right check and balances to ensure, and that's the comfort I think also is very important. Is, well, you say you're going to do a tawarruk. Have you done the commodity trading? What is that make a checker mechanism? Dr. Ziad, we've been in HSBs together. That's been a problem that we have also worked on. And I think that's the comfort I think a lot of people are also looking at. And we've had customers who have asked for that comfort. I think that sense of, that sense of that process is being in place and it's being articulated and it's been done is I think primary comforting factor.
We have just a few minutes left, and if there are any questions, please forward them. I think my last section or question is going to be around literacy and awareness. Dr. Aznan raised it when it comes to issues of Sharia compliance. People have customary preferences because of their upbringing or their understanding, without necessarily, the legal qualification to provide an opinion. But the customer is ultimately the one that's going to patronize our banks. So the question here is, how are we dealing with or intending to deal with issues of technological readiness and literacy? Because if that's already a challenge for Islamic finance, then how about digital finance? Merging the two together just, compounds the problem, it seems. So do we have any strategies that an incumbent bank is considering from a digital side, literacy level? A digital bank itself will be considering, because you've heard some of the stats, Indonesia, Thailand, Vietnam, etc. They are in the bottom half of technological awareness. So how would you suggest that we deal with this?
If I can add to this, so one of our consortium partners, and the reason why we select this consortium partners is Janek Su, and they are the owner and manager of this platform called Ringgit Plus. So the thing that we really like about what they do is the fact that they do a lot of financial literacy content. And I believe that's probably one of the value proposition that that we strongly put in our submission to Bank Negara, is that instead of wasting money, put advertisements in billboards and newspapers and stuff like that to acquire customer, because our strategy will be to really minimize the cost of customer acquisition through that manner, and instead providing financial digital content to really promote the financial literacy, especially to the to those who may currently not have access to. Thanks.
Thank you. Osman?
This is a great example how traditional banks and digital banks can coexist. So we also do use Ringgit Plus content to share to our customers sometimes when it comes to financial literacy. But I think a bigger problem that we've seen, especially in the traditional banks, and to Tantra, you would agree as well, is the internal knowledge and internal understanding of digital. So there's always a misconception there, and it's something that a lot of the traditional banks are working on right now. Is how do you build that understanding of what digital is, what it means to be digital, and also give them security that, well, you're not going to lose your job. That's one focus internally, is how do we build that, understanding so that then our solutions can be digital. Secondly, in terms of literacy, it is an ongoing effort. Again, not perfect. There are many gaps. And if we could go back to the infrastructure of the banks, it's about even incentive schemes. So if you look at some of the bigger firms, they have moved away from target-based incentives opposed to need-based incentives. Because when it comes to banks, when it comes to financing, it's always a hunter versus a farmer approach, traditionally speaking. And how do you do that? And when you go to a mall and you see people selling credit card, are they basing your ability to take the card on only income? Or do they really understand, is that a need? Because what you don't want to do is give them the 10th credit card and cause more debt. Then it causes financial disharmony all over again. So those are little things that the traditional banks are doing. To your question earlier, is how do we make sure that from a literacy point of view, we are telling them about need-based selling opposed to product pushing? That's one. Number two is how are we looking at our internalizing our digital capability within our people and talent? And that has been a very key focus area for CIMB as well as other traditional banks in the market today.
Incumbent banks. Yes. Thanks.
I think it's a big challenge, to be frank. But I advise one bank in Kenya. I think Kenya is one of the country where they have a lot of mobile banking.
M-Pesa, yes.
I mean, when I started advising them, I don't remember which year, long time ago, I was quite surprised because at that time in Malaysia, we were not so familiar with the mobile banking. We were using our mobile to call our loved one that time, rather than call the bankers and dealing with the bankers. I don't think the bankers are the one that we love anyway. We love when to get financing, but to pay, I don't think anybody love the bankers. I mean, jokingly, I'm just joking. But I mean, amazingly how the people there were very familiar with the mobile banking. I think now what we need to emphasize is that particular tech, how for us, I mean, the digital bank must look into how for them to really benefit from that particular small or big vehicle item that they have. Learning from that particular market, I believe that is one of a big marketing tools that we need to emphasize. That's the first one. Second one, take experience when we started Islamic banking in Malaysia. And that's what people try to do in other countries like South Africa, for example. I mean, ABSA and FMB, that bank, I helped them there. When we started Islamic banking before, I mean, we faced a lot of resistance from the people. My father was one of the staunch person against Islamic banking. He said, you are just changing the name to become Islamic and nothing Islamic at all. And it's very hard to convince him. Of course, your father is difficult to convince your father rather than other people. So the strategy that worked that time is that, of course, with all digital channels and everything, don't forget the human nature of the thing. Even though we are digital, but human play a big role. How for us to be able to use our quote-unquote agent in that good way to reach people. We are talking about unserved and underserved society. They are not people in the town, in the urban bank. They are unserved and underserved. What you imagine from these people? For them to be able to, for you to reach them, you need to have a very remote style of reaching them. And some of the, what we call the people that can be a source of bridging between us and them, that is very important. I think that's one of the areas that digital bank should not forget, even though you are digital. Human plays a very big role for that matter. Learning from how Islamic banking managed to penetrate people in Malaysia. Nowadays, you see only small group of people against Islamic banking. Why? Because of the hard work that has been done, not only by media, by everything, but also people play a big role. Ustaz, Tuan Guru, and everything. They play a big role in terms of reaching people for them to be able to embrace Islamic banking to the stage that we are having now.
Jazakumullah khair. And anything to add, Sister Rafiza, on the literacy and awareness? Okay. We have actually come to the end of the session, and I do want to thank the panelists for bringing in different perspectives from the incumbent bank side, digital bank side, Shariah side specifically. We've learned that there are challenges. We know that data privacy issues, that's prevalent. but also algorithmic biases, data biases. Those are real issues that we're going to have to deal with as we go along. It's going to be an exciting few years ahead. We're looking at a Malaysian landscape that's going to be changing from a banking perspective. It's going to be focused on underserved and unserved. But we hope that this will also carry forward, especially in the OIC, that has the highest level of unbanked and unserved. And really, that's where Islamic finance would probably need to make a bigger effort. We've also learned that literacy and awareness is key to the success of digital banking and Islamic finance in general. A better understanding of that requires more effort from the incumbent banks, the Islamic banks, from the scholars, from universities like INSAFE and other universities and certification bodies to assist people in actually understanding Islamic finance and how it works within the Islamic digital banking space as well. So I want to thank you very much. I think a warm round of applause for our panelists. And thank you very much. Thank you very much to the organizers once again for the invitation. It's been a pleasure. Jazakumullah khair. Thank you very much. Assalamu alaikum wa rahmatullahi wa barakatuh.